Hello and thanks for checking out ChartGuys.com. We're proud to be one of the most successful technical analysis communities online, teaching you the skills to become a more confident, effective, and informed trader. Join our community of hundreds of analysts worldwide working together to learn the charts, generate profit, and achieve financial independence. Sign up for a 1-week free trial, no credit card required, for access to daily live chart analysis and market coverage, a thriving chat community, along with dozens of hours of exclusive educational materials. We look forward to seeing you. Let's check out some charts. Hello everyone, checking in on the tech sector. The tech sector formed an inside bar on the daily time frame today. It had a stronger bounce than a lot of other sectors today. The financial sector continued to hit lower lows and was a drag on the market overall, but not the tech sector. The tech sector is what prevented SPY from dumping to lower lows and the S&P 500. So we do have an inside bar. We rejected from exponential resistance. The bulls have to break 57.28 on Monday and see another solid green day to try and confirm this reversal candlestick and see a bounce play out. But whenever I see a break of a higher low pattern, I then shift my mindset and then begin looking for lower highs and lower lows to form, because we did top out and we broke the low of that Thursday level. So on a bounce, we will expect a lower high to form on this bounce attempt. There was solid volume behind this move, but I am not a believer that it was enough of a bullish move to really turn things around and head back towards the all-time high. I do believe that we do have lower highs coming. So on the weekly time frame, we can see a bearish reversal candlestick, 3 rejections from $58 the past 3 weeks. Still very strong relative to the exponential moving averages and those supports. We would have to lose those levels, and the middle Bollinger Band will then be support, and we have a higher low pattern as long as 54.25 holds. So we still have a lot of support to go here on the weekly time frame, but the daily time frame has lost a couple support levels, and we'll be looking down at the low of the inside bar, 56.73, as a key support on Monday. So Apple bulls, higher open. Apple was the strongest tech name by far today. First thing this morning, it was up almost 2%, and it did fade a little bit by the end of the day, but it was very impressive to start the day when the market and the tech sector overall were not that strong. And Apple was a big reason. Apple is, I believe, about 14% of the holdings of XLK, and the tech sector as a whole is the biggest holdings in the S&P 500. So Apple in itself was a very big reason why the market was able to hold up a bit and form some inside bars, in my opinion. So resistance here is going to be 158.57, inside bar to be watching on Monday. Weekly time frame rejecting from the upper Bollinger Band 2 weeks in a row, and that is a bearish reversal candlestick on the weekly time frame. So we have to be watching if we start next week with the bear break of that daily inside bar, and we look at the low of the week of 154.63, and if we were to break that level, we would be on our way to confirming this bearish reversal candlestick after rejecting from the upper Bollinger Band resistance. Keeping a close eye on the bullish MACD cross as well, however, because the last time we did get a bull cross there, it led to a lot of upside. And we'll be watching with, blue sky breakout and a weekly bullish MACD cross. Certainly favorable for the bulls if that does end up playing out, but we may need to consolidate a little bit first. Facebook on the daily time frame, not nearly as strong as Apple. We did hold that low. It's a double bottom of 166.85, so that's a very clear support level where if it breaks, we know to go bearish. If we break that level, the next level to look at is the gap fill at 166.01. The bulls have to break 168.82, the high of the inside bar, to try and keep this middle Bollinger Band. Overall, in terms of the tech sector daily charts, Apple and Facebook are the lead bulls. And you can see Facebook holding the middle Bollinger Band 2 days in a row. This is a fine-looking chart. There is no fear whatsoever in this Facebook daily chart and the weekly chart as well. Very healthy consolidation. And again, nothing to worry about for the bulls that are long. And we do have a potential bull flag pattern. We'll see how the next couple of weeks goes. But holding exponential support, 3 weeks of bull move, 2 weeks of pullback, not even giving back 1 week of bullish action. So it is very healthy overall. And Facebook is still one of our lead tech bulls, as is Apple. Both of them still running on a bit of their bullish momentum following the earnings reaction. So that's what we've got heading into next week. Cautious of the market overall weakness dragging the tech sector down, but it was really the tech sector that was a bit of a life vest for the overall market today. So I appreciate you watching. Have a great rest of your weekend. We'll see you soon.